All right, traders, I'm going to be breaking down the top option plays heading into this week that are correlating with my gap trading strategy. Towards the end of this video, we're going to be going over the SPY and the VIX. Right now, let's get into the top option plays. I'm seeing a lot of great day trading and swing trading opportunities, but in terms of trading, I don't like diversifying. I just like trading the best setups at the best prices possible in terms of these videos that I'm making. So the number one play is going to be BBWI. We're also going to be covering Macy's stock. Towards the end, we're going over SPY and VIX. And we're also going to be going over some other stocks such as CAT, EMPH, Limit, Target, Ultra, and DWAC. These are the best setups that I'm seeing right now. Let's get straight into it. So in terms of BBWI, just make sure that you don't chase this. I already swing traded this stock. I wouldn't recommend buying puts if the price is below $38. In terms of the best entry, you're going to want to stick to that $38 price with that $38 at the money strike. You don't really want to go chasing these. In a sense, aim for the best entry. So if it does already gap down, try to wait for it to go back to the previous closing price. And if you see it reject the previous closing price, go from green to red, then you could scalp puts with $38 strike closest expiration. So in terms of the setup, it's going to be a gap close reversal to fill the gap below. This is going to be the same exact strategy, the same exact setup as Macy's. We're going to be going over Macy's. Also the same exact strategy as ULTA, and also the same strategy as upcoming DWAC. So what I'm about to show you, you can use these on other stocks as well within this video. So let's get into it. So in terms of BBWI, why did I decide to swing trade 5 figures of this stock right before the market closes into put options, right? So the reason why is this is a gap close reversal and it's extremely bearish setup. So here's some pointers that I can give you in terms of this strategy. You want to find a stock that is on a very strong macro downtrend, right? So a lot of the stocks in the market, into this bear market, they're on a very strong macro downtrend. They're very, very bearish. Then what you're going to want to do is you're going to want to wait for those stocks to become overbought. You want them to gap up. You want them to spike. You want them to keep on going higher and higher until they hit a gap that's waiting to fill above at a key resistance level. So this is a good example. BBWI, right? It's consistently downtrending for the overall macro chart. Whenever it spikes, it tends to sell off. Now, this is what you want to do. You want to wait for it to gap up and rally, become overbought, and then you want it to fill a gap that's waiting to fill above. That's at a key resistance level. So let me show you what it is I'm talking about. There's a gap to fill right here on BBWI, and you could see once it fills this gap and forms a bearish candlestick on the daily chart, which is not determined until the market closes, right? So we don't know what these candlesticks are going to look like until the market closes. But if it looks bearish right before the market closes, that's confirmation that we're going to see a gap close reversal, which means it closes, it fills the gap, and then it starts to have a reversal and goes back down to fill the gap below. See how there was a gap to fill below there, right? So it gaps up, it fills the gap that's waiting to fill above. Once it fills the gap, forms resistance, forms the bearish confirmation, then it comes back down to fill the gap below. But we don't enter the trade if there's no bearish confirmation. We're not just finding stocks that are on a consistent macro downtrend and waiting for them to gap up and pop back up the key resistance and then shorting them. We're also waiting for a key confirmation, and that confirmation is combining a bearish candlestick on the daily chart along with the stock topping out at a gap, right? That means it's going to have a gap close reversal, start to fill the gap below, right? So it's like a 3-step process in a sense. And you can see right here, the same exact thing is occurring. So BBWI had a gap to fill right here at $40.44, nearly the same price right here. And it formed the first bearish candlestick on the daily, and it's at key resistance, and it recently gapped up, and there's a gap to fill below, right? This is my favorite setup. This is the setup that has led to massive success within the market in terms of all my trading strategies. This is the best one. You can use it day trading, scalping, and you can use it swing trading. So in terms of scalping, if you see that gap fill right there and it's forming a roof, it's forming bearish candlesticks on the 1 minute to 5 minute chart, scalp some puts towards that gap fill price, right? And then in terms of swing trading, you have to wait right before the market closes because we don't know what this candlestick's going to look like, right? We don't want to short into a bullish candlestick at a gap, even if it's overbought at resistance, because it's a bullish confirmation. We want to wait until the bearish confirmation firms, and that is not truly determined until the market closes. So I'm studying BBWI, and I'm just looking at this chart and I'm saying, okay, every time it gaps up, it hits a bearish resistance level, it fills the gap. It loves to have gap close reversals. There was a little gap right here. It fills the gap. It starts to sell off. You can just see, I like studying the history. I like studying the past of these patterns repeating itself. There was a gap right here. It forms the bearish candlestick, has a reversal, and it starts to sell off. There was a gap right here, forms the bearish candlestick, starts to sell off. There was a gap right here, forms the bearish candlestick, starts to sell off, right? There was a gap right here, no bearish candlestick. Surely enough, it goes up, right? But you see where I'm coming from, right? So I'm looking at the past trends. I'm looking at the charts and I'm saying, wow, look at this. There's a gap to fill right here. It forms that bearish candlestick and then it starts to have reverse and downtrend. You see how well that works? So when I'm doing this with a stock, I want to make sure throughout its chart history that it's known for having that macro downtrend, that it's known for when it gaps up and then it fills that gap above and it hits that key resistance level, that it's known for having that reversal with that bearish candlestick, right? So I'm not just telling you that this works with every single stock. What I'm telling you is I like to make sure that the stock I'm trading the strategy on has a strong history of it working with what it is that I'm sharing with you. Meaning when it gaps up and it hits that key resistance level and it forms that bearish confirmation, it's known for selling back off. It's known for getting crushed. It's known for going back to fill the gap below, right? Not every stock is going to be doing that. There's going to be some stocks that might form the bearish confirmation, but it just doesn't work as well, or it doesn't work, as good as it should. And one way you can determine that is by simply studying the past, studying the history. History tends to repeat itself. And this is a stock that is basically telling me that history should repeat itself and we should see a micro crash. So in terms of what I'm looking for, the puts are extremely cheap. The puts are extremely cheap in this particular stock. They're very, very cheap. The ones that I decided to go with, in terms of playing it safe, I went the ones that expired this Friday, right? So I have 38 and 37.5 strike puts. The delta on these is like 40 to 50 cents. So if it drops $1, these are going to go up like 40 to 50%. In terms of my price target heading into tomorrow, I think we're going to be able to drop $1 to $1.50 from the closing price. So it closed at 38.23. My price target for tomorrow would be overall $37. $37 to $36.80. That's where my price target would be. Can I see this dropping further into the week? Yes, I can, but I can't say it's going to because I take this one step at a time. I'm trading the chart. Based off of what the chart is telling me, I'm seeing this bearish top wick, and then it sells off, has the first red day, tops of that previous closing price. You see that? That's what I'm expecting to happen on Friday. And then it has another sell-off, right? Based off of what the daily chart is telling me, there is more downside potential. There is downside potential to potentially $36 to even $35.50 heading into later this week. But I can't sit here and tell you that it's going to do that. What it's telling me right now in terms of the chart and in terms of the pattern, in terms of everything that is I'm seeing, it's telling me we should see something like this, where we top out towards the previous closing price and then just sell off about $1 to $1.50 from the previous closing price, right? But if it doesn't close, if it has that move, and then it doesn't close bearish, it closes bullish, then we might not see that continued downtrend into this week, right? So that's why things can change. Basically, if we get another bearish candlestick coming in on tomorrow where it closes weak, we should see continued downtrend. But if we don't get that, say it sells off, but then it comes back and it forms a nice green bullish candlestick and it tops out at 36 with a nice green bullish wick like this, like if we get something like this, then it's going to try to ramp back up again, topping out the previous support as resistance, right? Based off of everything that I'm seeing though, when we look super bearish, I'm taking it one day, one step at a time. I will keep members within Trader Society as always updated in real time with all my entries, exits, and then plans to trade this further. We had people trade this 3 times in a row. They played puts here, absolutely banked. They played puts here, absolutely banked. And then they swing traded 3rd time and they're going to bank 3 times in a row. So this should be a phenomenal play, and that's the overall setup. Gap close versus fill the gap below. Every time it hits the gap, every time it hits the resistance, every time it forms this bearish top wick, it likes to sell off, right? I'm comparing it to this pattern, and it looks like the same thing is going to occur. So I take it one day, one step at a time. Obviously, I will be locking in probably 70 to 80% of gains when I'm up, 50% plus, which could be as early as tomorrow if we drop to like $37, which I'm expecting to. And that'd be the game plan. simple as that, man. I don't hold these too long, right? I might leave on just a little bit to ride, but there's a lot of previous resistance, which is reacting at support at $36, and we could see a little bounce back to, 37.50 to 38 for my initial entry, which then could be another opportunity for trading puts, right? So just rinse and repeat. I'm not looking to really hold these forever. Based off what I'm seeing though, we are overall bearish. I'm going to take it one day and one step at a time, but my intention and plan is to sell basically the vast majority into tomorrow's crash if we get that crash. Now, in terms of Macy's, for Macy's stock, it is doing the same exact thing as BBWI. There was a gap to fill here on Macy's right here at an average cost of $23.04. It's at a key resistance level, nice downside potential. There was a gap to fill right here on Macy's. It filled the gap, basically had a reversal, came back down to fill the gap below, tops out resistance, comes back crashing down. You see the pattern, you see the resistance channel, you see the gap, right? So we have a bearish confirmation on Macy's right here. This is a bearish candlestick on the daily. And basically what the pattern looks like to me is two things. First of all, we have a gap here at $23.04. It filled the gap. It reacted as a reversal. It started selling off, closed weak, very, very bearish candlestick. We're at key resistance on the daily, and this is another reason why I'm bearish. Look at this pattern. You have this red candle here. You have this red candle here. You have this nice big green candle, small gap up. You have this nice big green candle. It was a bigger gap up, but same pattern. And then on the third day, it forms this red candle. And then what happened after it formed that red candle? It started to sell off and get absolutely crushed, right? So that's what I'm looking for. I'm looking for that 3-day pattern where Macy's does that. And you could see it when it dropped even further, right? You got to take it one step, one day at a time. Like I said in these videos, I can't really just say that I'm going to be holding these for a very long time because I take it one daily chart, one daily candle at a time. Now the charts can tell me things like sometimes they could tell me they can crash a little bit more, so I might like to hold it longer. And then there's other times like with DWAC where I'm just literally going to say I'm getting out the next day at market open, right? In terms of the way that Macy's and BBWI is looking, it looks like we can see some further downside where you can hold it more than one day, but I wouldn't recommend doing that. You have to be really like expertise and professional, and it's more advanced. I can't really like disclose everything in the video about that. That'd be a very long conversation, but if you're going to do that, just leave on like 1/4 of your size, 1/4 to 1/3 with anticipation that you're most likely going to get back all your profits, even if it sells off more. And then if it works, you'll probably get back your profits and then it will drop more in your favor. That's how I could see that going down in a sense. It's more advanced. I don't want to get back into it. Basically, when you're up like 30, 40, 50% on these, just lock in the vast majority of your gains and don't have too much of a expectation of, winning more to come. It's more advanced. It's more advanced. I just can't break it down all in this video. It goes more advanced in this. That's why I just can't give out like price targets like that. I can give out a price target for the day, but not for like the week. In very rare situation I can, but you got to take it one day, one step at a time, because I'm trading at the chart. That's what I'm doing at the end of the day. I'm trading what the chart is telling me. I see what the chart's telling me now, but it could be telling me something different tomorrow. And then people might say, oh, you flip-flopped. And I'm like, no, I didn't flip-flop. I'm trading the chart. I adapted to what the chart's telling me. I'm going to trade what the chart tells me. And if the chart is telling me to flip-flop or to exit, then I'm going to do it no matter what. So that's what you got to do as a trader. You got to trade the chart, and you can't be stuck in your old ways. You can't be stuck on one concrete solid plan. You got to trade the chart and trade what the chart is telling you in terms of your risk and your rewards. That's why I'm planning to really just take the vast majority of my profits tomorrow if these do gap down. But yeah, Macy's is the same exact setup. It's the gap close reversal to fill the gap below. We should be able to drop to, I would say, like $21.50. So if you want to look into $22 strike puts with the close expiration, I'm interested in this play as well. I like this. I'm probably going to take this heading into Monday. If we start to, go green to red and you see 22.20 break down, I would probably take puts on that as well. So that's one of my favorites as well. I love Macy's. I love BBWI. Those are my top two heading into this week so far. Now, in terms of other setups that I'm seeing right now, so what I want to go over is some more leap option plays. Before we get into that, I want to bring some awareness to target. So nothing really special in terms of the pattern. You could see right here, we are going to see an interesting move on target. There was a very big move that occurred on this stock at 164. As of now, it's reacting as a resistance, but you could see once it broke above 164, it had a very nice breakout to 174, and we do have a gap to fill above. So basically, 165 would need to turn into support to see a strong run to like 170 to 172. If 165 breaks down, you see a red day, then it's going to have a nice micro drop back to 159. I'm just going to keep it on my radar. It's a make or break level, but it's no significant special gap trading strategy. That'd be the disadvantage to this play. But we'll see. It could be a good first red day short. Once it has that first red day, we'll see though. just on my radar, not really too interested in it because, like I said, I don't want to diversify and I just want to trade the best setups out of his prices. And the best ones that I'm seeing are M and BBWI. So, yeah. Now, in terms of some leap option plays, these are going to be more like passive income plays where you just kind of, you don't take your full position size at once. So if you're planning to put in like, $2,000 into a leap option play, you would take like $1,000 at first, or you would put in like $650, times 3. You would do something like that. Right around there. Like you would take 1/3 at a time, or you could just take 1/2 at a time. Basically, that's how you would size in on these. And the reason why is it's very hard to time an exact crash on a stock if you're holding. If your intention is to hold it for weeks to months, it's extremely hard to time the exact top. So you don't want to take your full position size at first. These are leap option plays. These are very passive income plays, but it's not too hard to get an amazing entry. Like for example, if you were to do a leap option play on BBWI, when it filled this gap at the highest resistance levels towards all-time highs, you would have been in at the exact top, right? So, but you do want to play it safe. And what I would say is I would just scale in half. So if you want to put in 1,000, if you just put in 500 at first, and then if it rips 20-30% against you and you still like it, then just add the other 500. So, these are going to be the potential leap option plays that I'm seeing. There's no confirmation really yet. These are just on the back burner, and these are just stocks that I'm watching, right? So these leap option plays are expected to be holds for about 30 days. I'll be looking to go with 1 month to 2 month expiration, and I'll be looking to hold for a couple weeks. So Ultra, ULTA. So in terms of ULTA, it's nearly at all-time highs, and there's a gap to fill at 446. Last time it was trading at this level, it dropped pretty quickly to 387. There's multiple gaps that are waiting to fill below. We've triggered dark blue on the squeeze. So basically what I'm waiting for is I'm waiting for the gap to fill, and then I'm waiting for bearish confirmations. So once this gap fills right here, I'll set my alert. I'm going to be waiting for bearish confirmations, bearish candlesticks on the daily chart, consolidation towards the highs, the lower highs forming. Then I'll look to swing trade puts, most likely 30 to 60 days out, staying with at the money strikes. So all of the strike prices I'm going with are going to be at the money on these. So the closest ones to the strike price that are out of the money. That's like at the money basically. And yeah, that'd be the game plan for that. Gap close reversal to fill the gaps below. ULTA is going to be on the swing trading radar. That's a leap option put where I hold it for a little bit, right? Macy's and BBWI, those are all very short-term holds with anticipation of basically exiting tomorrow and then possibly even re-entering if they spike back a little bit towards those key levels into this week. But overall, they should drop more. So I might leave on maybe just like 20% of the size with, no high expectation of really anything. But yeah, Ultra is on the radar. Oh, another short-term one that's coming up is DWAC. So in terms of DWAC, this is another leap option put I'm interested in. There's a gap to fill above at $25.30. Once we fill the gap, I'll wait for the wick to come in. This is the wick. This is the wick, the gap levels, bearish confirmations. Remember those confirmations. If we see that form at $25.30, I'll look to swing trade puts, right? So I'm waiting for this gap to fill above. Once we get the wick, once we get the bearish candlestick at the gap, then I'll look to swing trade puts. Got my price alert set. Same setup as all these. Our next one is going to be, let's see, cat stock. So in terms of cat, CAT has a gap to fill right here at $240.16. There's a gap to fill at 240. All-time highs are sitting at 246. It's got some nice downside potential to about $205 if you were to swing trade puts for about 1 to 2 months out. For this one, I would be looking into a 2-month expiration. So the deal with CAT is it's in the process of having a gap close reversal. There was a gap here towards all-time highs. These are the best ones, the ones that are towards all-time highs at major resistance with big downside potential, right? Also, the best ones can be the ones that are on consistent downtrends that hit a key resistance level. But, this is basically like that same thing that kind of occurred with BBWI. When BBWI hit that double top retest in a sense, at 79, closed the gap, reacted bearish. So CAT, this is going to be one of my favorite setups, saving one of the best for last. It already had a gap close reversal. It filled the gap, had a reversal. It's been selling off, trying to form lower highs. So basically, if we can get some bearish confirmations at this lower gap towards 232 into this week, I will look to take my starting position on puts, and I'd be willing to add if we go above 240 to 240. That'd be the game plan on that. Looking to go with January 20th. So in terms of this one, it's going to be a January 20th expiration. It's going to be the ones that expire in 61 days with an at the money strike. So I will likely be going with $30 puts likely. Actually, no, not $30 puts. Excuse me. I'll likely be going with 35 $35 strike puts, $35 to $40 strike puts. Those are the ones that I would be interested in. So that's going to be a fairly good one as well. Excuse me, I'm looking at the wrong option chain here, my bad. So CAT. So in terms of CAT, like I said, January 20th and 240 and 230 strike, they're priced at 10 to 15. So these are a little bit more expensive, but it's well worth it in my opinion. They're still looking at potential 50 to 100% passive gainer holds. CAT's one of my favorite setups. It's showing signs of all bearish confirmations. It triggered dark blue on the squeeze indicator, which is extremely bearish at resistance. And it looks like we're going to be getting ready to sell off with some time, start to fill these gaps below. Another one, but I don't like this one as much because it has low liquidity and wider spreads. But I am interested in it a little bit. I'm just not going to be sizing in too big compared to CAT. LMT. I think LMT is getting to the point where it's just about done. For this one, I would go with like a 1 to 2 month expiration out. I'm looking for this previous support to react as a resistance. So far it is, but there is still a gap to fill above right around here. But it's on my radar to swing trade those puts. EMPH, I'm keeping it on the back burner. It's okay, but there's no gap to fill above, so I'm not too interested in it. Basically, the best ones that I'm seeing in terms of the leap put options are going to be CAT and DWAC. DWAC should be all right, but the options are priced a little bit too high on that one. I would say, that limit cat's my favorite, and ultra is pretty good as well. So yeah, those are the best ones. A notable mention that I'm finding a little bit interesting is, if you've been studying, the overall market in terms of these stocks that have been getting absolutely crushed, most of them, when they go up 100% from the lows, they don't tend to maintain. They tend to kind of come back down. And one stock that has went up 100% from the lows basically is Netflix. And Netflix used to have very strong support at $300 a share. It's now turning into resistance. So it is on my back burner to potentially swing trade some leap put options. Now, this is no significant gap trading strategy with this one. It's not a gap close reversal. There's gaps to fill below, and there's gaps also to fill above. So it's not a significant gap trading best setup. In terms of the best setups, CAT's in the process of a gap close reversal. DWAC has been having nonstop gap close reversals. So if it rips back up to 25.30, you know what to do. Ultra is heading back towards that gap towards here. BBWI and M are already having gap close reversals. Look super bearish heading into Monday. So yeah, just keep that in mind. But I'm going to keep Netflix on my back burner as well. Those are the best setups, the best prices. In terms of VIX, VIX looks overall bearish and SPY looks overall bullish. That's just how things look for the moment. It's a little interesting. I'm not doing anything too much right now, but in terms of VIX, what I'm seeing is, it's forming lower highs. Your support was right here. It cracks support. It turns your previous support right here into resistance, bearish wicks, and now it's coming back down to the lower support. There's a gap to fill below at $22.52. As you could see, there was a gap to fill at that same level right here. VIX bottomed out and it started spiking back up, but it's on a downtrend. It's forming lower highs. It's turning previous support into resistance. VIX doesn't look that bullish. If this cracks 22.52 and that reacts as a resistance, it's going to be a bloodbath. There's a gap to fill below right here, and there's a gap to fill below right here. This is where you're going to receive nice reversals on VIX at $20.60 to $19.56. $19.56 would be the best price possible to buy calls on VIX and buy puts on SPY, right? So that's what I want you to really focus on in terms of the best overall setups. I think by the end of the year, I still believe we can see $410 to fill the gap. SPY's a gap at $410.96 and $97. I believe that can happen towards the end of this year. When is that going to start to happen? It's going to start to happen once VIX can crack this 2250 level and react as a resistance. That's when VIX is going to start getting crushed to fill the gaps below, and SPY will start rocketing to fill the gaps above. Pay attention to the make it or break 2252 level. If it reacts to support, we see a micro run for SPY. If it reacts as resistance, we see a micro pullback. We'll see a micro run for SPY. If this reacts as a resistance, if this reacts to support, then we'll see a micro spike. We'll see a micro spike in a sense. So okay, so just be aware, right? This is the level, right? If this level reacts to support, then VIX is going to start to go up. If VIX goes up, then SPY starts to go down. If this level reacts as a resistance, then VIX is going to start to go down, and then SPY is going to start to go up. So just be aware of that. This make it or break it level is going to determine a lot and say a lot heading into this week at 22.52. As of now, things look bearish because lower highs. It already filled the gap right here. It had its reversal. It wasn't too strong of a reversal, and it's already coming back, crashing back down. But again, gap close reversals are real. So just remember, if this reacts as support, then the VIX is going to bottom out and it's going to start to spike again, and SPY is going to start to drop. But if this reacts as a resistance and it starts to break down, then VIX is going to start to go down and SPY is going to start to go up, right? So just remember that. Now, in terms of the SPY, what I want you to be aware of is our key make it or break it level is truly going to be this $395. $395 is your make it or break it support. As you can see, SPY was trading in a channel for about 4 days where it would bounce from about $394 to $400, trading like a 5-point overall zone. It did slip out of the channel and try to start to fill the gap. There's a gap to fill below 374, but it already recovered. And this support is already turning back into actual support. SPY needs to maintain above $395 to $394.20 to remain bullish. If it cannot do that, it's going to try to flip bearish and it's going to try to crack 390 and then start to drop even more. So 393 to 394 is make it or break it on SPY. For true strength, the bulls would need to push this above 396. Now, this daily chart's a little interesting, man. So, VIX looks bearish to me, but in terms of SPY, SPY, it's kind of hard to say right now. SPY looks a little bearish to me as well. So I'm looking at VIX and VIX looks bearish, but I'm looking at SPY and SPY looks bearish as well. So I'm going to have to just really pay attention to the reaction of the gaps on VIX at that 2260 level, and also SPY at this 394 to 396 range. But I would say this isn't the most bullish candlestick. This doesn't look super bullish to me, but it has turned 395. You could see it formed this candlestick right here, started selling off, formed the same candlestick right here at lower resistance, so it could start selling off, right? So that's a little interesting to me. But this 395, this 394 to 395 range is going to be very, very interesting to me. Going to keep a very close eye on that. So yeah, that'd be the game plan to see how SPY reacts at that 395, key level. Now, in terms of true strength for the bulls, they need to hold 396. They cannot go under 394. They must really stay above that 394 to 395. For true strength for bulls, they need to push above 396. If that occurs, then it rallies to 398. So basically, the key levels that I'll be watching on the SPY are 395 to 396 to see if it reacts as a resistance or reacts as support, right? I'm telling you that 395 is true make it or break it, man. Do not mess around with that level. Look at this. This is 395 right here. 395, big upside potential, starts to fill that gap at 411. Bottoms out, starts to rocket back up, tops out of previous support, reacts as a resistance, sells off. So very interesting, man. If it maintains above this 395, we're going to be seeing a nice run to $400 this week. So we'll see. If it cracks, then we go back to 390. So that's what you need to understand in terms of the micro price action for the SPY. It's really trying. It's really trying to hold up. Bulls are really trying to step in. So we'll see. If it goes below 394, I think it flips overall micro bearish. If it stays above 395 and breaks above 396 for true strength, we're going to remain micro bullish on the SPY, as it does have that gap to fill above at 410.97. So we'll see. It's going to be very interesting tomorrow. But those are the top stocks that I'm watching. Hope you guys enjoyed this and learned a lot. In terms of Trader Society, we're going to be reopening up, launching a new fresh program heading into the beginning of 2023. It's expected to be released basically on January 1st, which I believe is on a Sunday. So be on the lookout for that. That's going to be coming very, very soon. As of now, we're not accepting any new students. We've been a closed private group for quite some time now. But we are going to be reopening, relaunching to the public, heading into January 1st, expected to be January 1st. Of 2023. So stay tuned for that. I will see you guys within the next video. Make sure you watch Macy's and BBWI. Those are the free money plays. Those are the plays where you should make a very, very nice killing, like 50% potential return on the options. Be on the lookout for those. I will see you guys within the next video.